Hello, and welcome to another episode of ETF 360. I'm Kirsten Chang, Senior Industry Analyst at VettaFi, and today I'm pleased to be joined by Brad Roth, Founding Principal and CIO at THOR Funds. He's here to discuss two index-based strategies that aim to cushion the blow and manage downside risk today. Brad, thanks so much for being with us today.
Thank you so much, Kirsten. It's always good to see you.
Yeah, you too. I think it's safe to say downside protection and risk management are definitely top of mind in today's market. So right off the bat, give us your take on the markets here. Investors are grappling with lofty valuations, not to mention sky-high concentration risk among the mega caps. How do you see it?
It's exactly how I see it. We've had very lofty valuations. We've had very high expectations for earnings for a long time. We've had a market that has been dominated predominantly by a handful of names over the last couple of years. And the volatility recently is starting to really awaken investors that they probably should take a better look at their portfolio and the diversification inside of it. And, we're getting a little bit of hint of what the future may look like as we're right in the middle of earnings season. So I'm keeping a heavy eye on guidance, even though we're not getting as much of it as I would like. But time will tell, and the volatility has definitely woken a lot of people up.
Yeah, never a dull moment in these markets. So why are existing approaches like, that of the equal weighted RSP, for example, perhaps not sufficient for solving that problem of concentration risk right now?
Well, it definitely helps, right? I think moving away from such a heavy market cap weighted index exposure and into an equal weight like an RSP can definitely be helpful. But I do see how the index is constructed. It can get also heavy in certain sectors. It's equal weight by stock, not by sector. So actually in our fund, which is an equal weight, low volatility fund, which we're going to talk about today, we're going to do that equal weighting by sector rather than by stock. That's going to help us diversify across all the different sectors of the S&P 500 when we're long the market and want to be taking on risk. And so we think that helps a little bit more with broadening out that exposure rather than just purely market cap, or even equal weight can sometimes you can get sector heavy.
Yeah, definitely. So let's get into it. Let's talk about your funds. The THOR Equal Weight Low Volatility ETF, ticker THLV. It's a quantitative rules-based strategy that manages downside risk using what's called risk-off signals. Tell us more about those.
Yeah, so we have been utilizing these signals for a very long time in our SMA business and our model delivery business. This has become a very popular strategy in that area, so we decided to launch this as an ETF. The strategy, as I said earlier, equal weight, 10 sectors of the S&P 500, but we have an algorithmic component on the back end that is monitoring each one of these sectors in real time, whether we want to be long the asset class or if we want to be, as we say, risk off or remove it from the portfolio. So at all points in time, we're bringing every single tick of data. We're really looking at components of momentum, but also kind of that velocity of price and overall cycle of each sector to be able to pull things out of that portfolio that we may not want to be invested in for short and sometimes longer periods of time.
Yeah, it makes a lot of sense to diversify away from, heavy financials and tech sector exposure with an equal weight. So you also debuted a fairly new fund, the THOR Index Rotation ETF, ticker THIR, just last September. It's already seen some net inflows. Tell us about that. It's a similar strategy to THLV, right?
Very similar. The underlying components of how the algorithmic risk on, risk off it's the same science. However, instead of looking at 10 sectors equal weight, we've made it even simpler. We look at the big three market cap weighted index, the S&P 500, the Dow, and the Qs, NASDAQ 100. And really it provides two things. If growth is really outperforming and maybe value's lagging, we might have a tilt towards growth. If value is in favor, growth is out of favor, we might have that tilt as well. But with that risk off component, we're able to move to short duration treasuries when volatility kind of rears its ugly head, which thankfully for us, we've had a really good experience year to date with this particular strategy. Really grateful for the inflows and hope to see more as the strategy continues to perform well year to date.
Absolutely. We'll be watching. All right. That does it for ETF 360. My thanks again to Brad Roth for joining us. Thanks, Brad.
Thank you so much. Good to see you.
You too. Thank you all for tuning in. We'll see you next time right here on ETF 360.